my 2024 halving socks, which I really need, because it is all about the halving, right? It's, we had the demand shock, price went up. Now we got the supply shock coming. And the supply shock, it's actually big, because I don't know if you guys put out the data, somebody put out the data, 69%, maybe it was a lie, 69% of a BTC hasn't moved in the last 12 months.
Hey guys, welcome back to Everyday Finance. In this video, Yusko discuss about Bitcoin and crypto. According to Yusko 2024 is wearing socks that he truly needs because everything revolves around him. As you are aware, we experienced a price increase due to a demand shock. Supply shock is imminent, and since Yusko, the supply shock is quite significant. Yusko not sure if you guys released the information or if someone else did, but 69% of Bitcoins haven't moved in the previous 12 months, so perhaps that was a lie. The demand for ETFs will not increase linearly. It will take some time to reach the knee of the curve, because it will now be exponential, however. As you are aware, people like Yusko, Vanguard, and Morgan Lynch believe more capital will eventually flow as a result of Dro's limitations against ETFs, but even without even the biggest companies remaining steadfastly opposed, as you've observed both people and organizations. A significant portion of the capital of BlackRock is arriving from large locations, funds with sovereign wealth pension funds, to prevent a spike in demand disappearing, and 900 BTC are produced daily as of now, and lots of things Yusko discuss, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
I do have a little glint of green for the candle there, but, orange is Bitcoin Friday. I know I still have not received from my friends at Mount Socks, which I guess they're not listening to me, my 2024 halving socks, which I really need, because it is all about the halving, right? It's, we had the demand shock, price went up. Now we got the supply shock coming, and the supply shock, it's actually big. Because I don't know if you guys put out the data, somebody put out the data, 69%, maybe it was a lie, 69% of a BTC hasn't moved in the last 12 months. It's the combination. I mean, we had an aggregate demand shift. That's only going to accelerate, right? The increasing demand for ETFs is it's not going to be linear. It's going to be exponential. Now, it'll take a while to get to the knee of the curve, but as people like Vanguard and UBS and Merrill Lynch eventually drop their prohibitions against the ETFs, more capital will flow. But even with the largest firms still adamantly against, you've seen individuals and institutions. A big chunk of the BlackRock capital is coming from big places, sovereign wealth funds, pension funds. So that demand shock isn't going away. And there's 900 BTC a day produced today on April 8th. I think it's interesting that now the estimates are that the halvings are going to occur on the same day as the lunar or the solar eclipse, which is kind of wild. When it was going to be 420, everyone was all excited, and I think it's going to be 48 now. It looks like the number, but we don't know for certain. But if it does coincide with the solar eclipse, I think that's kind of wild. But that demand is challenged because this huge amount of coins. You got 1 million from Satoshi, whoever, and then you got estimates somewhere between 3.5 and 5 million coins that are lost or stolen, multi-sig that are stranded, whatever. So you're talking, and then you got, what was the number? 10 million held by individuals, most of them hodlers who have said, can pry it from my cold, dead fingers. But ultimately, the way markets work, I was busting a little bit on Scott Melker the other day. He's like, oh, there's, more buyers than sellers. I'm like, no. There's always exactly the same number of buyers and sellers. Right? That's just the nature of markets. But the price changes. And, someone says, I will never sell. There's a price at which you'll sell some. I mean, maybe not a lot, but if price gets high enough, you'll sell. And that's how markets move. So the supply shock, though, we go from 900 to 450 a day. That's a big deal if that hodler group, however you want to pronounce it, won't give up their coins, and there's less coins for the miners to sell. The other problem is the miners haven't been selling all of their coins. Some of them have, but some of them have been hoarding a little bit. So the supply problem is real, and it's only going to get more acute.
According to Mark Yusko, since nothing is equal, one of the things that consistently occurs in this cycle section is that we're nearing the end of the cryptocurrency summer. So you switch to cryptocurrency fall in June, and that's when we got the parabolic part in that late phases. This type of price movement in which Bitcoin takes the lead. People often move in unison because they anticipate having and subsequently having others, especially Ethereum at one point. The ratio was something like 10-1 or 8-1, and they would just move and lockstep. After which, it permeates the remaining coins as well, and some of them genuinely become noticeable to others, and you observe that they truly had their own spiky moves. Not as much as in the last cycle with Doge and Shiba, but at least no one is talking about them. Even though Yusko doesn't always see that foolish little puppy, he believes in frogs and other things this time. But Mark Yusko believes that Bitcoin is an example of this, although he hasn't demonstrated this in the way that he should refrain from claiming that they have seen the wallets that are heading to store up Bitcoin before the ETH was introduced. Acceptance. He will contend that those have anything to do with BlackRock, that they were essentially saving some to be able to purchase later. Let's back to the Mark Yusko interview.
Well, there's the logic, and then there's the emotion. So the logic would say, hey, SEC, you ruled multiple times that Bitcoin and ETH were not securities. Therefore, if you approve the Bitcoin ETF, ipso facto or, ceteris paribus, you should, approve the ETH ETF. That said, I watched, GG on the tube the other day, and I would say logic has nothing to do with this. He was all emotion, and ain't no way, that guy. And he basically kind of snapped at the interviewer, and it was pretty ugly. And he basically said, that's a decision for a 5-member committee. And I think if you think back to the Bitcoin ETF, it was only a 3-2 vote. And he was the deciding vote, but he was forced, like literally forced by the courts, in his mind. And action, probably in actuality.
Actually, I think, yeah.
Yeah. So I think actuality. But I think highly unlikely it gets approved, would be my guess, that emotion trumps logic.
In June, July of last year up till it was approved in January. So do you think there could be a similar effect for ETH?
It's tougher to tell because all things are not equal. So one of the things that always happens in this part of the cycle. So we're in the late stages of, crypto summer. So, June, we swap over into crypto fall and get the parabolic part. In that late stages, you see this kind of price action where Bitcoin becomes the lead because people are anticipating the halving. And then the others, particularly ETH, they tend to move in lockstep, like at a ratio. at one point it was like 10 to 1 or 8 to 1. And they literally just move in lockstep. And then it filters down into the other coins too. And some of them actually then get on people's radar, and then they actually have their little spiky moves. And you saw that with Doge and Shiba in the last cycle, not so much this cycle, but at least people aren't talking about them as much. I don't see that silly little dog all the time. But I think this time it's frogs and other things. But I think in Bitcoin's case, and I haven't proven this in the sense of going to the wallets, but I shouldn't say. I've seen the wallets that were accumulating Bitcoin in advance of the Bitcoin ETF approval. I will argue those were related to BlackRock et al., that they were basically accumulating some that they could then go buy from and make a little profit too. And maybe it was friends of the firm. Maybe it was hedge funds that they work with. Maybe it was, I haven't done the forensics to find out who, but my guess is that was pretty, you saw it every day. And that was front running of a different kind. Like normally front running is, hey, I just want to get in because I know something's going to happen, like an earnings announcement, like Coinbase, which we'll talk about. So there was a lot of front running going on because there were people who were pretty sure this was going to be a blow up number. And you saw it was going up every day into the earnings and then ended up even more after the earnings. But that's a different kind of front running than this. This, I believe, was getting supply because when the demand for the ETFs came in, I think people knew it was going to be hard to go find enough Bitcoin to buy. And so that could be what's happening with ETH. So if people were doing the same kind of thing, then you'd have upward pressure. And you've seen ETH actually outperforming modestly. I mean, it's been pretty neck and neck, but outperforming modestly in the last few weeks. I probably lean that unlike the Bitcoin ETF, where you had pretty clear signaling by the sponsors that, yeah, we're good. And, the relentless meetings back and forth. I don't hear about lots of meetings and lawyers, doing lots of billable hours on ETH. So,
according to Mark Yusko, there is the reasoning and the feeling. Thus, the reasoning would say, hey SEC, you made several rulings that Ethereum and Bitcoin were not securities. Thus, if you accept the if you know C Paris or the Bitcoin ETF is a fact, you should authorize the EasyJeff. Having said that, Mark Yusko saw Heji on the tube earlier. Yusko would reply that reasoning had no bearing on this since he was solely focused on feeling. That individual in no way lost his temper with the interviewer and appeared extremely unattractive. He essentially stated, that's a decision for a 5-person committee, and he believes that if you recall the Bitcoin ETF, he was the deciding vote in a mere 3-2 vote, but he was practically forced to cast it, compelled by the courts, both mentally and maybe physically. If you learn something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.